We had fake news regarding the approval of a Bitcoin spot ETF earlier this week, but now we're seeing follow through in price as if that news is coming. And there seems to be a consensus that it is. Even JP Morgan today saying that a Bitcoin spot ETF is imminent. Of course, we also have Elizabeth Warren and her anti-crypto army cracking down on terrorism, writing a letter alongside over 100 congresspeople and senators to the White House National Security Advisors. And we have Morgan Stanley ringing in and telling us that a crypto winter is likely coming to an end. This is rapidly becoming our most popular stream of the week. It's the Friday Five here with NLW. Guys, I look forward to this one every week. We're going to recap all the important news that's driving these markets. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and hit that like button. Go ahead and bring on Nathaniel right now. Happy Friday. Good morning. And man, we've got a lot to talk about today.
We do, and it's not all Sam. It's an amazing week.
Although I will say, for whatever reason, people really engaged with our conversation about Sam last week. So it's clear that people are watching that trial and really interested in what's happening there.
It's our exorcism, so of course you can't look away. That's what's so bad about it.
It's the slow-moving train wreck that you have to watch, and collective catharsis and therapy all at the same time. Really good.
Exactly.
But we can dig into the stories of this week, and we've touched on some of this obviously in the past. I like to put up her picture just to trigger everyone really early. We've got Elizabeth Warren here. U.S. Senator Warren leads lawmakers to push administration on crypto-backed terrorism. Of course, she's getting the headlines, but there are 102 lawmakers that have signed this. Clearly, there's real interest in Congress and the Senate in pushing this narrative that crypto is funding terrorism. Here's a bit of what she had to say, or the letter did. So it's not just her. Given the clear and present danger posed by the financing of these and other militant organizations, we asked the administration to provide additional details on its plan to prevent the use of crypto for the financing of terrorism. Congress and this administration must take strong action to thoroughly address crypto illicit finance risks before it can be used to finance another tragedy. Is this a fair criticism of crypto, or is it not?
This is why people hate politics in a simple, cute little package. A thing that is very, very tangentially related to an actual tragedy and horror show of modern life becomes a leverage point for someone who's just pushing an agenda that they had in advance. Nothing is new, just to be clear, about the bill that's being pushed from what it was being pushed earlier in this summer. It has nothing to do with exchanges that, for example, have been known or proven to facilitate terrorism. It is entirely about just DeFi KYC, right? It's a very, at most, orthogonally related thing. But in the wake of this, the horrendous attacks, and particularly after the Wall Street Journal writes this piece kind of saying that it's, funded by crypto, it's just exactly what, she needed to go leverage this point. Now, there are a couple of things that make it perhaps less bad than it seems. And some of these go back to what we talked about last week. The first is when it comes to these 102 people, my strong guess, now I haven't sat down and gone through this with a fine-tooth comb. My strong guess is that about 97 or 98 of those 102 were handed a letter by a staffer that said, this letter says the White House should do something and Congress should do something about, crypto financing terrorism. And on the face of it, that's fine. People are going to sign on to that. And I think that this is sort of, this point is the evidence of this is the fact that there are a number of pro-crypto Democrats who have signed on, right? If the premise of the letter is just, hey guys, this is an important vector for funding of terrorism in the future, we should make sure we have good policies for that. Totally reasonable. Everyone in crypto would agree with that. Now, what we know is that there's a bigger agenda behind it. Here's the other thing about politics. Even these 102 senators know, or, the 102 people who signed on to this, they still know that that's not the same as actually supporting a bill. This is just a letter. It's an open letter. It is actually the cheapest most convenient and least committal way to associate your name with anti-crypto terrorism financing without having to actually do anything about it. So it's just as toothless as anything else she does, except insofar as it continues to kind of erode and distract from other conversations. So I think it is extraordinarily frustrating. It's completely predictable in some ways, but it in and of itself, I don't think necessarily shows a lot of shift in momentum other than what we might already have seen around this. The when push comes to shove, this bill will either be actually kind of advanced or it won't. And when it is or isn't, it will be debated on the merits of it then. So it's kind of just a distraction. It's a very annoying one. I do think that it has impacts for all the people who are in the crypto lobby in DC who are just trying to have, common sense conversations and move things forward sensibly. But it's probably less impactful than it is annoying is my kind of short take.
I think this goes back to the old adage, never let a good tragedy go to waste, right?
Mm-hmm.
And especially if you're a politician and you have a specific talking point and you can somewhat superficially attach that talking point to something that's happening in the world, you go for it. Now, I will say I agree with you. This should be addressed, right? If crypto is being used in some way to fund terrorism, then sure, that should be stopped. But it's crypto, so they are freezing wallets. They're actually taking action against these things, regardless of what Elizabeth Warren says. And so you can take that criticism and it's valid, but you can't take it in a vacuum because you have to make the same criticism for every other form of illicit financing for terrorism, like pallets of cash being delivered, across the border, which we all know is happening. So I think that it's a unfair singling out of crypto. More importantly, when you dig in, here's the rest of the story. Chainalysis says some reports might be overestimating crypto's role in terrorist financing. And this isn't just an overestimation. I'm just going to read you what Chainalysis had to say, easier than discussing it. We have seen recent estimates related to the attacks on Israel that appear to include all flows to certain service providers that receive some funds associated with terrorist financing. In other words, these total include funds not explicitly related to terrorism financing. To the untrained eye, it might appear that 82 million worth of cryptocurrency was raised for terror financing, but it is much more likely that a small portion of these funds were intended for terrorist activity, and a majority of the funds processed through the suspected service provider were unrelated. So they're saying that with the estimate that Elizabeth Warren's talking about is 82 million, has an extra few zeros there. It's about 450,000 worth of funds that actually ended up in terrorism-affiliated wallets.
Yeah, the presumption, or the statistics that this whole kind of story was based on was the idea that this particular kind of exchange money transmitting business in Gaza, 100% of it was illicit funds to terrorism, which obviously just isn't the case. No, listen, this is, again, it's why I can't ever get ultimately that frustrated, is because there are so many obvious counterpoints, and at the end of the day, people don't make policies. Even our terrible system tends not to make policies exclusively on bad information unless you have a really extreme situation. When push comes to shove, those reports are going to get identified. I'm glad Chainalysis stepped up and did that. Now, it's an interesting sort of sub-story. One of the things that I think a lot of folks are watching about, the Chainalysis, the elliptics of the world, is to what extent they are sort of defenders of what the community might say are crypto values versus tools of a surveillance state. And it's a very tricky line to walk. And this is a great example of a company that is probably the biggest beneficiary of US surveillance of crypto from a financial perspective, still going out of its way to say that's not really true, and I think that's an encouraging sign. I wouldn't expect anything less from them from what I've seen. The CEO of Chainalysis very famously had it was calm on his end, it was testy on Elizabeth Warren's end, but they had an exchange at a hearing once where she was really trying to get him to make her point about this exact sort of thing, and he just said it just wasn't true. Yeah.
She had the prepared talking points that she could not stray from. It was a pretty incredible hearing for anyone who didn't see it, because no matter what he said, she just went on to her next question as if he hadn't even answered, which was classic, I think, politics and trying to, do her stump speech on his behalf. There's a pretty big story, number 2 here. Gemini DCG sued by New York for alleged 1.1 billion crypto fraud, right? So Gemini being included here. We've only seen sort of the DCG side previously, but they're being sued by New York's top law enforcement officer for allegedly defrauding customers of $1.1 billion, escalating legal woes for two companies hit hard by last year's plunge in cryptocurrency markets. This is civil. It's not criminal, for everyone to be clear. And we know that that this office, the New York District Attorney General, has it out for crypto and is kind of part of the Elizabeth Warren anti-crypto army. But there's something here, right?
Yeah, I mean, so there's a couple ways to look at this. The question is, I mean, if you could go kind of hyper realpolitik and ask what the likely impact of this is going to be. And to some extent, then the question becomes, is there any real new information or new accusation, or is it just basically the New York Attorney General saying the stuff that everyone already saw, we consider fraudulent, you know? And I think it's, whatever. It's I'm not minimizing the seriousness of this for the for the plaintiffs here or for the defendants here, but it really isn't some new smoking gun type of information, at least on my kind of initial read. It's not a Sam kind of case where there's some new thing that's been addressed. In fact, I think in some ways, what seems more concerning to me around Genesis and DCG right now is some of the stuff that's been brought up at the SBF trial that raises questions about what was known when, regarding those loans. But again, going back to just, real talk about this is the sort of kind of, gray area, debatable, fightable, that a lot of these battles are going to take place in quiet courtrooms and behind the scenes. And, I think in general, DCG's been on the drag it out until crypto markets are good enough that we've saved ourselves kind of plan for a very long time. And this is just throw one more thing on the pile. Maybe the amount that Bitcoin needs to hit, or the number that Bitcoin needs to hit, just went up a little bit to save them. But that's their whole plan has been waited out, for as long as they can. I mean, Gemini has even said that in their public kind of, accusations against them.
Yeah, I think the sort of additional information here, as I said, is that Gemini is being named, and there's some egg on the face of the Winklevi twins, because they've sort of been the aggressor pushing against the evil empire of DCG. And now it looks like at least Letitia James thinks they're kind of complicit in this fraud, that they knew Genesis had the hole in the balance sheet. We obviously saw the argument over the $200+ million that the Winklevoss twins had withdrawn from Gemini Earn a couple months ago. Of course, some said that was them front running bad news that they knew and still telling their customers that everything was fine. They quickly responded and said, no, that wasn't even us. Actually, this was shoring it up and putting money into an insurance fund. But clearly, there's a lot of he said, she said going on here. And at the end of the day, it seems that the biggest players knew that there was something wrong at Genesis. Yeah. We saw it in the FTX trial, as you said. Carolyn saying, listen, Genesis said we need 500 million, whatever the number was, to shore up our balance sheet. Can you guys send that to us? She sends a fake balance sheet. What this speaks to me, is the endless clarity we're getting on how incestuous the big players of this industry were in this yield chasing environment that crushed us last year.
100%. I mean, so here's the thing. And again, maybe I'll be clear about why I don't think this is that big of a change. I don't really think anyone was buying the, Tyler and Cameron being the white knight kind of thing, right? This is for some time now. I think that the average feeling in crypto has been a plague on all your houses, burn it to the ground, go to jail, pay your fines, whatever you need to do, just get the hell out of the way and let us build back the way that we were supposed to. And so it's sort of, I do think that it's more confirmation or more kind of evidence in the column of that sort of perspective. But, I think that your analysis that it's sort of, further evidence of what has become real clear about the last year is quite clear, or is quite true.
Yeah, of course, you have to point out this tweet, Silbert, that everybody's dunking on and brought back November 23rd, 2021. It's my turn, Sam, to which Sam gave the few eye emojis. Everybody just sort of, now saying it's my turn, Sam, implying that maybe it's Barry's turn to get called in by the courts, right? Not exactly what he wants his turn to be. But of course, I think the big question then becomes, will the lawsuit against DCG impact GBTC's chances of an ETF conversion because DCG is the parent company of Grayscale. And we all know, once again, there was an incestuous relationship, certainly among all DCG entities, Genesis loaning to Grayscale, loaning to Genesis, and all of these other players. Will this affect it? Well, I would say the market doesn't think so because we're still seeing that GBTC discount disappearing with time. And I would say that maybe it affects Grayscale in some way, but I don't think it affects a Bitcoin spot ETF in general. But most analysts who are looking at that, we have a lot of pundits who are saying they'll never do it, but we have a lot of experts saying that this is a nothing burger.
Yeah, I agree. I think that the market is going to be the actor to punish DCG when the Grayscale Bitcoin Trust converts. I think all that money is going to convert and flow out and flow into iShares or Valkyrie or whoever like I would say that the
GBTC, BlackRock, Grayscale, BlackRock. Let me choose.
The average I think analyst position at this point is that it's far more likely that a big swath of these things get approved all at the same time, and they sort of let the market decide, then they hand, the keys to the kingdom to just one. Also, if they do decide to hand the keys to the kingdom to just one, it certainly is not going to be Grayscale. So, listen, there are real serious problems. I would not be a long-term bull on that business in a lot of ways, but it's not going to be because they're not allowed to convert. I don't think. I think it's going to be because rational market actors are going to say, no, thank you, and move to somewhere else.
Yeah, I think consensus is that DCG is a bit of a train wreck, and it's one that's probably priced in. That's how I feel about it. Everyone's expecting something bad to happen over there. So if it does happen, we're going to move on with the BlackRocks and ARKs of the world, and life will continue.
Yep.
And then we get to SBF. What's happening at the SBF Sam Bankman-Fried trial? I think that last week we covered Gary and Caroline rather extensively, but now we have Nishad Singh and, of course, Zach Prince from BlockFi being, I guess, the star witnesses of this week that we haven't spoken about. I know you've been following this closely. Is there anything brand new that we're seeing here? SBF lawyer pokes holes in Singh's story on FTX spending. And, of course, just to get these stories out of the way, the Sam Bankman-Fried trial is revealing crypto's amateur hour ways. And I think that's very clear, circling back to the incest that we were speaking of before. But let's talk about what's happening in this trial. Any new revelations?
Yeah, I would view these two testimonies as less revelatory and more very specific parts of the story for the prosecution that are not going to be particularly good for the defense. So when it comes to Zach Prince, obviously the former CEO of BlockFi, in some ways the main thrust of that it was actually less about what the prosecution said in this case and how poorly the defense handled it that I think will be the lasting impact. The defense at one point went through a very long sort of 40-minute extended line of questioning around a set of loan documents, and what they were clearly trying to establish was that basically it was BlockFi's risk management department's fault that these things happened. Effectively the argument was, you are so stupid, you should have known our client was defrauding you, kind of more or less. That was the argument. And at the end of the culmination of this big sort of long, classic, whatever, defense presentation, Zach Prince had to point out that the documents that they were talking about were for a loan that they hadn't approved. That they did approve loans later, but that one that they were literally trying to make their case, that the risk management department had said, yes, it's too stupid to use FTT as collateral unless there's a shitload more of it and other collateral too. So no, we're not going to approve that. And Zach Prince agreed with his risk management department. So it was just, it was, for people who are in the court, they actually said that in some ways it was even more embarrassing than other kind of moments, just because it was so it's dumb, on the part of the defense. So that I think is, they almost just lost an entire plank of the potential defense, which is other actors really knew what was going on, and they should have made different decisions. When it comes to Nishad, I actually think that in many ways, the biggest impact will be with the jury and on sort of a human level. I don't really think there was particularly a lot new that came out with Nishad's testimony that wasn't already covered by Gary or Caroline. Caroline, I think, really did the biggest work in showing just how many points along the way sort of Sam had been running the show and determining exactly what they were and weren't going to do. And Gary kind of added this, almost a technical aspect to that, like how they encoded that in the actual platform itself. Nishad, in many ways, just showed this sort of human side of a guy who was very clearly, doing stupid things, but at least feeling guilty about it. Not that he came off as sort of like super, likable or anything like that, but it didn't matter. It just, the fact that he showed some remorse, the fact that he was angry, the fact that he was frustrated, as opposed to, the picture that's emerging of Sam is just as this complete sociopath. And I think that that's going to really stand out to the jury. Now, the last thing that I think is interesting, you might have seen all these stories that say, the defense finally got a blow in. Man, that is the most because they haven't been able to write that story exaggeration in this trial. Like they literally, what this entire thing is based on is that apparently at some point Nishad told the prosecutors in an interview in December or January that he was somewhat hazy on what June and July 2022 were like. And, listen, I do think that Nishad was clearly still a little ass covering in a way with this. And it sort of, it stood out, but that's different than the defense landing some major blow that just,
Yeah, it's like, hey, they finally got one jab in the 7th round after taking an absolute beating and happen to still be standing up. So good job. Some of the funny revelations surrounding Nishad, though, where they said, he really wanted to quit. He really felt bad. He was going to quit. He obviously didn't quit, guys. And just like a month before FTX collapsed, he took a loan directly from FTX for a $3.7 million house that he bought in Washington. This is Nishad. So
I think that's the most damning thing.
I
think that's the most damning piece of that for sure.
Yeah. Go ahead.
No, I think that, like, look, to do the right thing, it requires two things. It requires you to know what the right thing is, and then it requires you to do the right thing. And it sounds like Nishad at least had half of that equation, unlike some of the others at FTX, but he still didn't do the right thing. And that's why he had to plead guilty to all these charges as well.
Yeah, and he'll pay for it. The amateur hour, by the way, part of that story is worth just mentioning because it shows how difficult it was for all of these companies to vet any of this information, and also how hard it was even to get an auditor, right? Paradigm, BlockFi, Genesis, and other companies did not have access to audited financial statements prior to investing or loaning billions to FTX, etc. And this comes from the Zach Prince testimony. He said, effectively, any and all financial information that the potential borrower was willing to share with us is all that we had to go by. So he's literally saying, and this aligns with what Carolyn said about the fake balance sheets, nobody's auditing it. Nobody's willing to audit it. Of course, everybody wanted to believe that they were giving the boy genius their money and he was going to turn it into multiples. But the fact is that they were all doing these incestuous loans again on, well, if you say it's okay, then it must be, right? Yep. Here's the balance sheet for my Excel that I will give you to prove what I have. Now give me a few $1 billion.
Probably a screenshot of it as well, not even the actual chart. No, the one other story that I just remember that I think is actually quite telling and may also resonate with the jury was in 2021, FTX had $950 million in legitimate revenue, right? Trading fee revenue, and Sam really wanted it to be $1 billion apparently, and he had Nishad go back and backdate a set of contracts between another one of Sam's companies and FTX, where those other companies paid FTX $50 million for staking Serum, which was, of course, a token that Sam also made up. And so that's how FTX went from 950 million to $1 billion. And I think that what's so telling about that is how preposterously unnecessary it is. Like, again, a big part of the question for these juries are going to be, and what Sam is trying to prove is this a person who got themselves in over their head and made a set of bad decisions that slowly trap them in an ever increasingly bad situation, which is basically kind of the sense that, or the feeling that Caroline tried to give? Or was this sort of masterminded from the beginning? And we've heard about how, these things were coded into the platform to allow Alameda to have a negative balance all the way back in 2019. Certainly seems like the beginning. But the egregiousness of making up these fake staking sales just to go from 950 million of legitimate revenue to $1 billion is so telling of the callousness and the lack of caring that I really think that even though it seems silly and is less egregious than some of the other things that were done, it'll stand out to as speaking to Sam's character.
I agree. The guy was just a fraud from the beginning. It was all about his ego and all about the perception. And that's why he had to be with Tom Brady and Giselle and Shaq and Larry, David. Clearly, this was just about stroking his ego. He could do no wrong. And nothing he did should have been considered bad because in his mind, the ends justified the means. It's really crazy town, man. It really is.
Yeah.
Sometime
after some of these class action lawsuits are done, maybe I'll go give you guys the ranking of which of these celebrities were the most fun to work with and the most sincere and serious.
Yeah, I don't think people even know here like how involved you were in the marketing side there and how surprised you were. But one day maybe we'll do a separate show and dig into that. Of course, our next story here, which everybody, this is number 4. Everybody sort of watched live on Monday when we were doing Macro Monday, was the news that the Bitcoin Spot ETF had been approved. It was fake. It was Cointelegraph. A single tweet that came out sent the market flying from roughly 28,000 to 30,000. Within moments, seemingly everybody found out that was fake, and it went down. I think this speaks to an environment where these news sources, not just in crypto, but maybe particularly in crypto, are much more concerned with being first than being right. The Cointelegraph chief editor was on a panel right after this and said, hey, man, this isn't our fault. That's just the way the world is. We wanted to be first. We found it in a random Telegram group. We went ahead and printed it because YOLO. And by the way, you guys are idiots for believing it. We're not really idiots for posting it. I mean, listen, that's hyperbolic, but that was the gist of this. But this did give us, I think, at least as far as price action, an idea of what could happen if we do see a Bitcoin spot ETF. And maybe that's the story people want to talk about. I actually never do this on Fridays. I brought a chart just because you can see what happened when that move happened a few days ago visually. Today, we've actually seen price go higher than that fake ETF news pump. Although it's sitting lower, it actually did manage to go higher. So clearly whatever happened got people excited for what would happen if we see this approval.
Yeah, so I think you're right that we shouldn't spend too much time on, lamenting the fact that modern news rewards speed rather than accuracy, because we all know that, and we're not going to solve that here. I do think what's the most interesting part of the story is what it says or suggests about what will happen when an actual ETF is approved. So there are the line of thinking that I saw from a lot of folks, people like Alex Kruger, who I always respect what he has to say, even if I disagree. They pointed out that the broad perception has been that a spot ETF approval is priced in, and that this suggests that it is significantly not priced in. Now, that there's certainly plenty of evidence of that. I mean, we ripped up 7% and then back down, and $100 million of liquidations along the way. The question for me, and I'm interested in your take on this, Scott, is to what extent it's almost like both parties are right, the people who think it's priced in and the people who think it's not, in the sense that it is inevitable that there will be some absolute rip to some level on the news that it's happening, but that then when push comes to shove and the actual thing happens, it's likely to kind of recede or stay at some point. That it's not going to be some massive inflows that jack the price up another 30% or something like that. But there's probably 5, 10, 15, whatever percent it is, where the bottom resets a little bit because we know this is coming. I mean, what's your take on that?
I share the same sentiment. Dave Weissberger actually on Twitter Spaces broke this down very well yesterday. He said, there's 3 kinds of market participants: the speculators, those are the ones who spaz and buy immediately when they see the news. Then there's like the more swing traders, and there's the longer term investors. And the reaction of the market will be based on what each of those people do in their timeline. So basically we saw, the speculators. By the way, this wasn't new money. If you looked, altcoins got destroyed against Bitcoin. So this was the old washing machine of crypto, where a bunch of people said, Bitcoin's better than altcoins right now. I'm going to sell my altcoins into Bitcoin, right? So I don't think this was a bunch of RIAs advising their clients in that 20 minutes to get in on Bitcoin and new fresh money coming in from institutional capital on the sidelines, right? So I think that we see what we saw the other day on steroids. Exactly what you said. Maybe a move to 35 or 40, right? This huge kind of move. And then people say, okay, we have an ETF. price slowly comes down, and then fundamentally over time, much like the Bitcoin halving, which, that supply reduction takes 6 to 9 months before it actually affects the market outside of the narrative of it affecting the market. And then maybe we see sort of that sustained growth based on real volume coming in, real AUM coming into a BlackRock ETF and these things. So I think it aligns well with what you're saying, is that we'll see a big pump, then we'll see a bunch of people take profit because they'll say that's it. And you'll get all these shorts and longs liquidated on both sides, and then we'll take some time to see what happens afterwards.
I think that it feels likely to me that, or I guess one of the biggest questions rather is what is happening in the world around it, because one of the most important things that happens when the Bitcoin price rips up is how the media frames it, right? And if the media frames it as just, this goes up because of ETF hype, I don't think that that pushes anyone new in. If we get if there's been some big geopolitical event the same day that the SEC happens to approve it, and you see Bitcoin ripping in the opposite direction of other markets, a different story gets written, and I think we've seen that a couple times this year. So that's kind of what I'm keeping an eye on is what sort of surrounds the news of whatever kind of little jump we have there.
Yeah, I think that's right. But the moral of the story is don't fall for fake news until you see it reported very widely and quickly. But hey, it was fun to watch and fun to be reporting in real time. I can tell you that. So at least it led to some entertainment. I guess this will be the fifth story, right? We got the final story here. We are going to do an honorable mention at the end. But will Crypto Spring ever come? Now, interestingly, I wrote a Crypto Spring newsletter just last week, and literally gave the exact same analogies as Morgan Stanley ended up giving this week. I'm not saying they're copying me, but clearly there's a lot of people who are now debating the seasons of crypto. I've been of the mind that Crypto Spring has been here for a very long time. Mark Yusko discusses this very well by pointing out that weather in spring sucks.
Yes,
right?
Exactly. People forget how much spring sucks.
Yeah, spring sucks. So yeah, winter is horrible, but most of spring is terrible. And you have a beautiful day, then you have a terrible day, and you have a sunny day, and then it snows a week later. And that's what I think we've been experiencing here. Whether it's Crypto Spring or not here is not why we highlighted this as a story. It's that a article called "Will Crypto Spring Ever Come?" is coming from Morgan Stanley. To me, that's the story. It's yet another massive institution really digging into the nuance of the 4-year cycle and what happens with these each year in crypto. I think that's the story here. Really big.
I think too. So I completely agree, and I think that the so a couple things. One, it's coming from Morgan Stanley. Two, it's actually a fairly useful article. This is the type of thing that a person who was at, Morgan Stanley or Bank of America or any traditional financial institution could send to a person who's not really paying as much attention to Bitcoin and crypto and say, this is a pretty good job of explaining kind of what this cycle actually means. It's a useful analogy, in other words. And I think that they do a good job of, in whatever it is, 400 words, kind of crisply explaining it. So it's not just that they wrote it. I think it's actually a useful piece as opposed to a lot of these things. So that's one part that I think is notable. The other part is that I think in some ways a measured sort of rational markets are thawing, keep like one little tiny piece of your brain take from Morgan Stanley is a hell of a lot more useful than if they had blown it out and said, the bull is back and like kind of, if they had gone too far, because that just looks like analyst hype. That looks like it's trying to get people to share it. This feels like a piece that was written because they're actually trying to understand where in the cycle we are and what evidence we have, not that they're trying to sort of make big buzzy social media headlines. And I think markets and traditional markets especially can smell bullshit. And so when you have this sort of more measured piece, it contributes to this overall sense of, we are past the worst point, and there are these people who are sort of lining up around the edges and starting to kind of, replace their chips on this table. And, maybe I should start paying attention again. And I think that's a much healthier place to be than sort of either, assuming it's dead or assuming it's, we're so back.
And guys, I think it's worth reading if you do want to dig into it. We won't do that now, but it does offer actually metrics about what's happened in past cycles, how far the drawdowns tend to be, when you can gauge that maybe the bottom is in based on the bounce. They really dove in and did this right, which I found very impressive. And go ahead.
No, I really dragged this. I did this I do a long read Sunday on the show on Sundays where I take an article and then sort of analyze it. And I really tortured this analogy, extending it. And I think, for me, the thing that I was sort of talking about on that is part of what shapes the transition from spring, when we move from very early spring, where it's just the thaw, to late spring and the beginning of summer, I think in a lot of ways is the stories that non-crypto market participants are resonating with that bring them in. And if you look back at other cycles, there's always a Bitcoin story, but then there's other things as well, right? So in 2020, we had Bitcoin leading the way with great monetary inflation thesis, but that was quickly followed by DeFi summer for the degens in the space to get their hands dirty and get excited again, which was followed then by NFTs for normies, right? This year, we're just starting to see the first kind of shadows of what the Bitcoin narrative might look like, right? With people talking about geopolitical instability and Bitcoin being a flight to quality with that. We have no idea yet what those sort of resonant narratives are going to be, either for the sort of the insane internal traders or for the normies. And I think that as those things, as we start to see more contenders for those stories, that's when you're going to know that we're kind of transitioning once again.
Yeah, I'm putting my money on RWA because it's got a new three-letter
leading
title,
contender.
Real World Assets. That's my leading fighter right now. Guys, we're going to do a very quick honorable mention. I know that we're way over our intended time here, but there's just a lot to talk about. We have to mention this. SEC drops charges against Ripple CEO Garlinghouse Chairman Larson. To be clear, they're still pursuing the central Ripple case. So any of the bad takes you saw that the SEC was completely dropping this are false. But the SEC is clearly capitulating here once again on another part of this case. Seemingly, Chris and Brad are out of trouble here for any personal responsibility or liability. And you just love to see the SEC continuing to take these small losses.
Yeah, I mean, this one is fascinating. We could have done the whole show on this. Basically, when the judge's most recent decision was that the SEC was not allowed to appeal part of the case that had been decided so far, they had to wait until this piece of the case was done. Basically, the executive piece. And so the read that I've seen from people who I think are the most sort of dispassionate is that the SEC clearly wants to have the fight around the judge's interpretation of Howey and how they were going after that, as opposed to executive culpability, and they want to start having that now. I mean, that reads to me like that is a fight that Gensler wants to pick before he's potentially out of office. So I would expect more, not less, fireworks because of this decision, at least in the short term.
That's a good take, because I think to your point, they're focusing on what they can win and getting rid of all the nonsense that might deflect from that case. I think that's absolutely correct, guys. That's our Friday 5+ kind of half. We'll call that the Friday 5.5 today, because we did get in Brad and Chris there at the end with Gary. This happened apparently on Gary Gensler's birthday, by the way. So Twitter was really excited to see him take a small loss on his birthday. Yeah, I'd love to see it. Once again, guys, you can hear this on both of our audio channels, both of our YouTube channels. And you get to go and hear NLW give a better introduction after actually listening to it and knowing what we ended up talking about. So worth checking out there. And of course, his daily show. And I do love your long reads on Sunday. I think that's great. Everybody should check that out, especially I'm not here on Sunday. So you got to find something to listen to. Man, thank you so much. Appreciate the extra 15 minutes that we did here. I hope you guys enjoyed it. And that's all that we have, I guess, for today. So, man, I'll see you next Friday.
Later, guys.
Bye, guys.
That's dope.